One of the biggest considerations when determining whether or not to buy a house is what the monthly payment would be, right? So in this video, I'm going to break down what a realistic looking payment would look like on a $350,000 home. I've been doing home loans for over 13 years across multiple states, and one thing that I know that a lot of home buyers lack is clarity. So I try to bring that to you here. So this example is going to be based on a home in Las Vegas, Nevada, but it's still going to be relevant for most areas of the country. A term that gets thrown around a lot is PITI. And that stands for principal, interest, taxes, and insurance. So we'll look at PITI for a $350,000 home with a 5% down on a conventional 30-year fixed loan at 6.375%. And real quick, there's always some dude, whenever I throw out a random rate that's like, oh, that rate's so high, why are you charging so much? I can get a lower rate. And the people that say this usually don't honestly know how to compare rates, because there are a lot of different factors that go into rate, like down payment, credit score, loan program, loan amount, a lot of different factors. So, and then also rates change day to day. So like take this rate example with a grain of salt. This is what I think is realistic for a home buyer in this market right now. But there are a lot of variables that can change that. So to be clear, this rate is not a quote. It's just what might be typical at the time of shooting this video. Okay, so the first and biggest portion of your payment is principal and interest. Principal goes towards paying the loan balance down every month, and interest is the fee that you pay to the bank. So in this scenario, the principal and interest would be $2,074.37. Now, when you own a home, you also pay property taxes and insurance. Now, I'm guessing on a $350,000 home that the annual property taxes would probably be about $2,500. Now, that's going to vary depending on where you live. Sometimes it'll be a little bit more, sometimes it'll be a little bit less. And even like when I'm looking at this scenario in Las Vegas, the taxes will vary on different homes. So things that affect the property taxes are like the age of the home, the size of the lot, the size of the home, a lot of different other things. But I would say $2,500 a year on a $350,000 home is probably average. Now for insurance, specifically homeowners insurance or hazard insurance, this covers the property like mainly in case of damages like fire. And I'm going to just throw out a number of about $1,200 a year, which would probably be typical. And that's about $100 a month. But again, that can vary depending on the particular area of the home. So this brings the total up to $2,382.70. But wait, because we're not quite done with insurance yet. Whenever you put less than 20% down on a home, you typically have to pay mortgage insurance. Specifically on this conventional loan example, you have to pay PMI, which stands for private mortgage insurance. Now, honestly, it doesn't really do you any good at all. It insures your lender in case you were to default on the loan. So if you were to stop paying on the loan, the lender would have to foreclose on you, and they may have to make repairs on the home, hire a real estate agent, pay closing costs to sell the home, and they may actually end up operating at a loss by the time they end up selling the home. So basically that PMI covers the bank's losses if they had to foreclose on you and sell the home. The rate that's charged on PMI is heavily dependent on your credit score and how much you put down. But in this example, it would be about $140 a month. So that brings your total mortgage payment, including PITI, to $2,522.70. We're still not done, because if you buy a home within a homeowners association, you have to pay an HOA fee that's usually charged monthly. Now, these can vary depending on the HOA and what they provide. Sometimes they're as little as like $8 a month, and sometimes they're as high as like a few hundred. But I think what might be typical would probably be something like $75 a month. So that brings your total housing payment to about $2,597.70. Now, the HOA is not going to be included in your mortgage payment. Typically, all the PITI is included in your mortgage payment, and then the HOA is paid separately to the homeowners association. Now, there are several ways where this payment estimate might not match what your payment ends up being on a $350,000 home. So maybe you have a higher or lower interest rate. Now, that can be affected by your credit score or other factors, or just based on changes in the market. So rates go up and down on a daily basis. And so by the time you're watching this video, rates might be very different. Different down payment options are obviously going to affect your mortgage payment, because the more that you put down, the lower your mortgage balance is, and the lower your principal and interest portion of your payment will be. Again, differences in property taxes and insurance will affect your payment, because some areas have higher property taxes than others, and some areas also cost much more to insure. And then last, this option was based on a conventional loan, which is the most common and typical loan, but there are other loan options out there like FHA, VA, USDA that will affect your payment differently as well. So if you want to know what the numbers look like for your particular scenario, please reach out. My contact info is in the description. And if you're not quite ready for any of that, please consider following for more tips.